Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and looking up options data from unusual whales. So, this is another episode of Hunting Unusual Whales. I'm going to go over some unusual whale alerts that have stood out to me, either from Friday, the last trading day, as I am recording this on Sunday, September 1st. And yeah, so I'm going to go over some alerts from Friday and kind of, go over why or why not I am interested in them and, hopefully narrow it down to one to partake in a trade starting when trading opens on Tuesday. And then I'm also going to go over a few trades that I have either just recently executed or, am still holding and hoping they play out. And so the tickers that I will be going over in this video, first, as you can probably guess, Palantir, ticker symbol PLTR. I will also be going over Nvidia, ticker symbol NVDA, as well as Affirm, ticker symbol AFRM. I will also be going over the one and only GameStop, ticker symbol GME, and I will also be going over a couple that I still hold, and just kind of evaluating whether or not I should average down or exit. Hope for an exit soon. One would be Norwegian Cruise Line Holdings, ticker symbol NCLH, as well as Warner Brothers Discovery, ticker symbol WBD. And so usually I do these just for members, but I kind of wanted to open this up to more people because I don't know that this has really been utilized that much by members. It is helpful for me in kind of planning out my week. And rather than doing the more conventional weekly trading plan that I was doing for about a month, my weekly trading plan is effectively looking up unusual whales and, swinging them ideally for 20%. And, the reason for that is, some of them might go up 100% or more than that, but not all of them will. And so my goal is basically to do either day or swing trades within a week, turning whatever the initial cost to buy a contract into that, times 1.2 or, a 20% swing. And yeah, it's worked out pretty well for me so far. I could have probably made more on some trades, but I also could have probably lost if I was greedy and pushed that limit to above 20%. So yeah, I think there's some good lessons with that. And, really the idea is that for all of these trades, I will be in and out within the span of a week and taking profits, stacking profits, rather than hoping for a 10 bagger or something like that. Those are going to be rare, and so I would rather just stack 20% gains. On occasion, I have gotten more than that, but yeah. So to start this, I am going to start with Palantir, and the reason for that is because I did, just copy and paste from Unusual Whales alerts. Put this on the channel for members only, as you can see up here where the cursor is. This is for members only, but I just thought I'd go over this because, it's only 99 cents to become a member. I do think there is a lot of value with it because, I'm really just posting, my thought process, my ideas, how to become a better trader in these plans with unusual whales, hunting unusual whales. I think there's a lot of value there. And yeah, so this contract, as I had written yesterday when I was at work, I've been at work all weekend, so excuse me if I'm a little tired. I will try to edit this down so it should be a clean video with some nice timestamps for you guys. But anyways, in this post I wrote that I'm intrigued by this one with almost 1 million on it. And so we can see that here with the premium being almost 900,000, with the majority of it, 98% effectively of this order being on the ask side. So that being, 98% of it buying this contract. So going short, I should say, because this is a put on Palantir with a $30.50 strike expiring on September 20th. And so that's a lot of money betting on Palantir going down. And so the reason why I'm intrigued by this is because, I should note I don't have an order placed. I still don't. But I could see Palantir dropping $1, as if we do flip over to the chart, Palantir is currently trading a dollar above that, actually a little bit less. Or, if we look at the after hours pricing, it is a little bit higher than that. But, given that we have seen this big move to the upside, does look like we bumped into resistance with that, really that being the channel here. Let's see where those pivot points from that we can see. Let's see, it goes back in time a little bit. So those are the 3 pivot points where you see those blue circles. We did just bump into it. I predicted that perfectly. Pretty proud of that analysis. Although, I was thinking maybe it could come up to 35. But, 33, right around there, it did get rejected and pulled back, finding this prior high right around 30 bucks as support before bouncing. And so maybe this is a dead cat bounce and it does continue to go lower. And so, with that being said, $30.50 is, above that line. That is, right around where the cursor is right here. And so I could see it pulling back to that level. I could see it going lower. If this is a dead cat bounce, that would imply that price will be going lower, breaking below that horizontal line at 29.83. But I could also see it moving to the upside to test this uptrend again, as resistance maybe getting up to $33.50, maybe $34 before getting rejected again, or maybe it breaks out and really starts to go higher, like up to 35. So I feel like this one's a little bit of a gamble. And so just looking back at this alert and what I had written about it, like I said, I could see it dropping $1, but I could also see it rising a couple bucks. So that makes me a little bit nervous there. And so I'm going to post more alerts that stand out to me throughout the day while I'm at work. And so I did that yesterday. I posted 2 more alerts, actually a number of alerts, but 2 different tickers that stand out to me. So I'll go over those in a minute. But with this one, I'm intrigued because of the amount of premium on it, that it is majority on the buy side. So it's a very clean, this is a bearish play that Palantir would be going down, expiring a few weeks from now. So, I don't want to do anything really opening any contracts that are, within 2 weeks, just because it gets a little too risky and it affects me, emotionally. I get a little antsy and, I'd rather be in and out on something that expires a month from now than need to be in and out because it expires in a few days. And so those are the main things that stand out. Also, the average fill is $1, so that would be $100 per contract, since each contract represents 100 shares. So $1 average fill times 100 is $100. And so really my price range, I try to find contracts that are $1 or less, but I've actually had some success swinging some that are around going up to like $1.50. And so, my window has really expanded to about $2. So spending $200, risking $200 on a contract. And I just do individual contracts. And so this one, let's look at some of the contract data for this here Palantir. And so what we can see is the volume traded here on Friday. So this was from August 30th. We can see this big spike at the end of the day. It's that alert that we got. And that is a volume of almost 9,000 contracts traded on the ask side. And between the bid and the mid, not even 200 contracts traded. So this is, majority going short because this is a put. And we can see that the open interest prior to this was 836. And so now there's an increase in volume of, let's see, subtracting these from that, around 8,500. So this number of open interest would go up to over 9,000. So that's a more than 10x of that open interest. And if we do actually look at that alert that I do have pulled up, let's see, volume over open interest, it's 10 times the volume over the open interest. So the volume is 10 times the open interest, I should say. And so that is really suggesting that, it's kind of a dormant contract and now there's a lot of volume on it. So that is a whale activity. That is some whale activity, especially with it being so close to $1 million. Although one thing that I've tried to figure out, not all whales are smart, and some of them can be smaller. Some of them can be dumb, and I feel like a dumb or a small whale, I like to think of it as a manatee, just kind of, nomming on the seagrass and, not really thinking too much, whereas an unusual whale has a lot behind it and, can really move it. And so this one, I'm a little bit concerned that just looking at the chart, like I had talked about, I think that this could be going down, but I also think it could be going up. So, maybe it does pull back before going up. I could see that, but it does seem to be a little bit risky. So I don't have an order placed on this one because of that. But, maybe I can convince myself otherwise by looking up the options data here. So I'm just going to type in Palantir, PLTR, see what pulls up. And this is based on some filters that I have. I'm not going to get into those details. But yeah, so here we could see a number of puts, it looks like, for September 20th. And this is at the $30.50 strike. And it does look like those were, all, within the last few minutes of trading on Friday. And so that's going to be the contract that I was just looking up here. And then it does see this symbol means this trade was a part of a flow alert. So click for the full context. And so, with that, it's basically, the same information I was just looking at. So that's not really too exciting. But that does, show that there is a lot of bearish sentiment from this, order that was placed. But if I do scroll down, we can see some calls down here that were bought on, let's see, on the 28th, so on Wednesday of last week. These expire on September 13th. So let's see how much money is behind these. 41,000, so not an insane amount. And, I like to think of like 10,000. That is how you define a YOLO on Wall Street Bets. So this could just be like, 4 degens that come together, placing a bet, Wall Street Bets, and, they lose money. Then they're going to post their losses on Reddit after that. This expires worthless. So, I'm not too convinced by this. And so this doesn't really present much of a bullish case to me. So I could see, looking at all of these alerts, I have 150 that would be popping up here. And, the majority are on the put side. Here's one for the 6th. So this coming up Friday with a strike of $29. This was also a part of a flow alert. So let's look at that. This one has, 143,000. So that's pretty big. But, it's not a million. Or close to a million. But I can look up this contract. We see a spike here, pretty substantial, but there was a good portion on the bid side. And so actually looking at this for Friday, we can see that on the ask side, there's about 7,000 contracts being bought, but over 12,000 being sold. So this actually makes me think that this is more of a bullish outlook, in that selling puts means that don't expect price to go down anymore, or just really taking risk off the table. So I view this as being more of a long stance. And so with that being said, that makes me feel kind of iffy about this alert that, I was just talking about over here. And so one other thing that I do want to look at, I'm not as familiar with looking at this data from unusual whales, but considering the numbers up here, we can see that the volume breakdown from calls and puts got about 200,000 in call volume, about 100,000 in put volume. So it's about 2/3 on the call side, so 2/3 tending to go long. And with that premium, got nearly 3 times the amount of premium on the call side being traded than on the put side. And so, yeah, is that right? Yeah, nearly about 3 times. So about 3/4 of that is on the call side, and about 1/4 is on the put side. And then also looking at just, the premium being traded here, it's about 12 million, a little bit more than that, 12.5 million going long for the bulls, and about 11 million on the bearish side. And so, that's kind of split 50-50 as far as those numbers go. So I'm not really that convinced by this. So I still do think that this is one that I'm going to sit out on, because just looking at the chart, maybe it does pull back, but it doesn't really seem that clear to me. There's not tons of money on it. I'll go over some in just a minute that have a lot of money behind them that, I think that is, an unusual whale, a blue whale, whereas this, maybe it's a minke whale. It's a smaller type of whale. Maybe it's a killer whale. But killer whales aren't invincible. Unusual whales, though they are. And so, yeah, I am just going to flip over to this again, and then I'll scroll up to the next post that I did, which was on Affirm. And so this was actually a series of alerts. So I'm going to click, I can click this arrow here to go through them, but these were all from Friday. And so this first one is on the bid side. So that means that this suggests that this contract was being sold. Somebody was actively selling it. And this is a put with a $35 strike expiring in November, so 77 days from now. So if I do look over at the chart at Affirm, we can see, okay, a put on the bid side, that means somebody had a put. Maybe they were expecting it to go down following earnings. They thought after this gap up, it might start to pull back. And they're like, no, it's not going to pull back. I'm going to get rid of this put contract, cut my losses, and then move on. And so from this order, 81% of it was on the bid side, 0 on the ask side. So the other, 19% would have probably been on the mid side, which could have just been like just selling, at whatever the price is. So, this makes me think that, this could be going long Affirm because they've recognized that, it's probably not going down. And with that being said, just looking at the chart, this is, where things get tricky for me because, I don't think this is the one that I'm going with for the ones on Tuesday. But looking at this, gap up here between Wednesday following their earnings on the 28th, gap up, what happened on Friday? A continuation to the upside, got almost 32% to the upside on the 29th, and then a continuation up, going up over 5.5% on Friday. And key thing, closing above Thursday's high. So that does not suggest weakness. That suggests that this could be continuing, although volume does seem like it's coming down, but it's also, Friday before the long weekend, the holiday weekend. So maybe that is a factor in it. There's probably less volume being traded. This still got pushed higher. We look at the RSI, it's 82.64, so that is overbought. It does look like it's kind of tapering out a little bit. There's a big spike here going from 62.02 up to 80.52. And then now it's 82.64. So it's kind of flattening out. So maybe it could be rolling over. So this doesn't make me think, makes me think it could be going up, it could be going down. But anyways, let's look at some more of these alerts here. Another one from Friday is, a put. This is on the bid sides. This is saying, thinking it might be going down, but recognizing it's not going down, so getting rid of it. Oh, and I should note the premium on the previous one, about $300,000. This one about $300,000, majority on the bid side. And this is a contract that expires this coming Friday. So, this is suggesting that price will be going higher. Don't want to risk it, at least taking the risk off the table at this point. Another contract here, this is on the ask side, so going long, buying a contract that expires on September 20th, $50 strike. Premium for this one is over $1 million, although if we factor in the bid and the ask, this is about 75% of that $1 million, or about $750,000, is going long. Volume over open interest is like 1.57, so not as much as what we were looking at with that Palantir one, with that being almost over 10.5 volume over open interest. But still, this is a lot of money. So regardless of the difference between volume and open interest, a lot of money here is going into Affirm. And then looking at this other one, this is also a bid side put. So, again, going long, about $500,000, a little bit less than $500,000, especially considering that the bid to ask is 71 to 25. So about, 71% of this is effectively being taken off the table and going long effectively, since this is a put that's being sold. And so, what do I think about this one? And so let's look up the contract. And so that is the Affirm $50 strike for the September 20th expiration. And so the reason why I picked that one is largely just because the average fill is 90 cents. And so to buy one of those contracts, it would cost $90. That's less than $100. So, that's in, my price range really. Whereas if we look at, this is on the bid side, so it's being sold. So, and then all of them were puts being sold. So, this could also just be people taking risk off of the table, selling contracts, whereas this is the only one where it's like they're buying so they think it's going along. But let's look at that data. So over here, Affirm, this is looking at the trading on Friday. It seems like it's pretty mixed. There is a lot of red in this chart here, but majority green with over 10,000 volume traded on the day going long with these calls, buying these calls. 4,000 with the mid here, assuming let's say those are sells, that's about 5,000 volume, 5,000 contracts going short, or just taking the risk off the table, taking profits. Because these were calls, and looking at the chart, we did just see some big up moves. So it makes sense for people to be taking profit, following this big move up and before a long weekend. So it seems reasonable that people would be taking risk off the table. But if people are taking risk off the table, that means it could be topping, and so that makes me think this is I'm a little less convinced by this one than I was with the Palantir one, to be honest. Although just like looking at the chart, though, the chart makes me think this could be continuing based on this close being higher than this one. However, with volume pulling back and kind of the tapering out of the RSI, it could very well, be putting in a top or be very near a top. So this one seems pretty risky to me. And also, a number of these contracts being sold, so there's just less conviction in that. And I should also note the open interest prior to the close on Friday, so at the start of the trading on Friday, open interest was over 7,000, but then volume traded on the day was more than double that. And, but about 2/3 of that volume was on the ask side, 1/3 on the bid side. So, it's really like 67% going long, 33% going short, or just, being neutral, taking the risk off the table. So a little bit less compelling than I would like to see. But, it is, I guess, encouraging that there are a number of contracts traded, or not a number of contracts, a number of orders being traded here. Whereas if we compare that with the Palantir one, that is, really just like a series of orders within a few minutes at the end of the trading day. Probably just one person executing that. So, it's just one unusual whale rather than, a series of them. And and so looking back over at the Affirm chart, one thing that I'd like to do is not just looking at this contract, but if we look at all of the Affirm orders here, and we can see some more information on Affirm to kind of, evaluate, is this one worthwhile, worth taking the risk, or maybe not? And so the thing that I just really wanted to point out about this, could get into, that there are not only calls being bought with this, but there are also a number of puts being bought with this. So this is the $50 call that I was talking about. This is the one I was just going over, so this should look pretty familiar. If I do look at one of these other contracts, let's see this $43 strike put that expires this coming Friday. That is also, the one that was bought just, a few minutes before close on Friday. And so if we look at that, that's got 600,000 behind it, but, the majority of that being on the bid side. So, that is, again, suggesting going long. And maybe this is actually one that I did have over here, 43. Let's see. Yeah, so that is this contract. So pretty interesting to, see how these alerts relate to the data. But then looking back over here, I did want to look at these numbers up here again, getting more familiar with them myself. But seeing this, we can see that calls about 200,000 on that side, about 1,000 on the put side, so pretty similar to Palantir. Premium being traded, this is definitely more heavily weighted On the call side, it looks like about 80% versus 20% for puts. So that is a little bit better than Palantir. And then also, if we look at the premium that's being traded, it looks like on the bullish side is about 32 million, whereas the premium on the bearish side is about 30 million, 29.44 million. So that is more that's being traded than the Palantir contracts. If I just pull those up real quick, we can see just those numbers at around 30,000. Palantir, is less than half of the amount that's traded on Affirm. So Affirm definitely seems, in that sense, as far as the amount of money, amount of contracts being traded on it, Affirm definitely does seem to be a little more compelling than Palantir. But, I also, think that there is something that could be better. And so that is going to be the next alert that I will go over. And this is one I actually do have an order placed to pick up one contract, hopefully around open on Tuesday, but we will see. And so this is a number of contracts that I got alerted for on Friday, all Nvidia. There's one in here that stands out to me as potentially being of interest. And so this, let's look at these contracts. This first one is on the bid side. So this is selling a call. And so this is actually bearish. And this is coming up September 27th, so 28 days from now before that expiration. This is about $1 million being taken off the table with this person. It could just be that they are taking that money off the table, taking the risk off the table, because if we do look at the Nvidia chart, it has pulled back some, but it has gone up a lot since, the beginning of August, when we did have that gap down across the market on August 5th. Nvidia has gone up a lot. Did look like it was bumping us into some resistance here, where I do have that trend line drawn. It does look like a channel going back in time a little bit with those pivot points being right here. So, those are the levels that, are significant in that. And I believe actually, I drew this based on some analysis that Gareth Soloway had done in his every weekday morning game plan, his live game plan, highlighting that with this parallel channel, it did serve as support here before with resistance here as well, and then now resistance again. So this does seem to be pretty significant. Also did serve as a dip buying level around here for like I said, that gap down day on the 5th. But yeah, this does seem like it could be going down, and that's what this suggests with selling a call. But I think there are some mixed signals here with Nvidia, so I'm going to get into that with some of the other alerts that I have. This one is for a strike of 113. This is a call on the ask side, and so if we look back over at that chart, 113. That is currently in the money. We're above 113, which would be coming down to, around here where the cursor is there. And and so that is expiring again at the end of September 27th. This, as far as buying it goes, the average fill for this contract is over $11, which translates to over $1,100 per contract. That's way too pricey for me. I cannot partake in this. But this does suggest bullish sentiment, over $1.5 million. However, looking at the bid to ask ratio, only about 2/3 of that premium is going to be going long, with the other 1/3 effectively going short, being on the bid side, selling those contracts, or if not, going short, taking the risk off the table. And so this represents about $1 million going long for that strike of 113. Definitely seems like could be closing above that, but I think these people, if they're holding on to these contracts or buying them, they expect price to be moving higher. And there is another contract with this, or this screenshot here does include another contract, but I also got a hot contract alert on that other contract, so I'll go over that later, and that is with a strike of 114. So in just a second, I'll go over it. Here's another contract also expiring in 28 days on September 27th, and that is at a strike of 116, also being in the money here. And this is 100% on the ask side, so about $1 million going long with an average fill of 944, so that being effectively $944 per contract. Too expensive for me. But, this is data. This is interesting. I'm interested in what's going on with Nvidia. And so looking at the next contract, this one stands out to me as being a little bit interesting, not only because it's a hot contract, but because that call strike, also expiring in 28 days, is much higher than the other contracts. And this is an out-of-the-money contract. And so that means that there's more possibility for the value of this contract to go up. Because it's out of the money, if it moves in the money before the 27th, this contract could go up a lot in value. Although the premium traded on it is only, 360,000, with about 71% of that going long, whereas about 11% on the bid side, or going short, or just taking that risk off the table. And so this is quite out of the money. And so let's look over at the chart to see, does 136 make sense? And so looking at the chart here, we can see the highs. This high that was hit on the 26th when we, were putting in that top there, that was at a price of 131.26. And so 136 is higher than that. But if we do take a step back, we can see these prior highs. This high hit on July 11th was at 136.15. So that does seem kind of reasonable that we could be getting back to that prior high. And the all-time high for Nvidia was at $140.76. And so with that being said, it's quite possible that price could be getting back up there. It could be retesting those highs, especially if we look at the RSI here. It has pulled back from when it was elevated here, right around 62.82. It has pulled back now, being 49.30. So that could, does look like it might be getting ready to start to move back up again. So I could see this bouncing. And this has pulled back from this move up to right around the 382, just being a little bit above it with the lows on Thursday and Friday, that being at a price of 115.76. The low on Thursday was at a price of 116.71. So maybe there's a bottom there, and maybe it's getting ready to bounce. And because following earnings, there was this drawdown, but I had actually posted a poll on X, kind of questioning, whether or not, people thought Nvidia would be opening above 140 after earnings. And the majority of people thought that Nvidia would be opening up above 140. And so I could see the buy the dippers stepping in after this pullback and pushing it higher, perhaps getting above this uptrend, perhaps getting back to these prior highs. And so that does make me think that 136 is feasible for Nvidia. So I'm pretty intrigued by this contract, especially because the average fill for it is 144. So that is in my price range of, ideally being closer to $1 per contract, but being less than $2 per contract. So this is something that I would potentially risk, while this contract specifically doesn't have, millions of dollars behind it. But, this contract, it's on the ask side, call, so going long, it's got about $1 million on it. This other contract, ask side, going long with a call, about $1 million on it, considering the bid to ask ratio. So, there are millions of dollars on Nvidia, thinking that the top is not in yet, that the bottom is in, and that we could be moving higher. So I'm pretty compelled by this, but there is another contract on this one. This is that 114 call that I had mentioned earlier, also expiring on September 27th in 28 days. And this, average fill, too expensive for me, but that premium is more than $2 million, more than $2.5 million. However, about 88% of that is on the ask side. So if I do, just 1 second here, pull up my calculator, I can do, 88% times 2.6 million. And that represents more than $2 million then going long on Nvidia just with this contract. So it looks like, there's about 4 million going long Nvidia just with these specific contracts that I talked about going long. So even if there is some bearish sentiment with calls being sold, that's just 1 million, where it seems like there's a lot more, at least as far as unusual whale alerts goes, there's a lot more going long. So I'm compelled by this one. I'm intrigued by it. And yeah, I mean, looking at the chart, I could definitely see, while I think that, you all have to know if you do follow the channel that I'm short semiconductors. I am a holder of ticker symbol SOXS, which is 3x leverage short semiconductors, but I really only have that as like a hedge for when we do see pullbacks. I made money with that with that ETF on August 5th. I took profit. And then I've just been adding as, Nvidia has been going up, as semiconductors have been going up. But that's really just a hedge for when we do see, gaps down, volatility like we saw on the 5th. But, since I'm already kind of hedging against, the possibility of another pullback or another gap down, going long Nvidia, kind of seems like, even if I lose money on that, I could still be making money with SOXS. If I do make money on this, then I could just roll some of that into getting more SOXS at a cheaper price. So this overall just seems very intriguing to me, but I do want to look up, the contracts over here. So just looking at this NVIDIA contract that I'm interested in, the $136 call strike expiring on September 27th. And so that is, 25 days from now, or, 28 days from when I posted that, when I took the screenshot from those alerts on Friday. And, from that we can see that, really it's 2,000 contracts traded on the long side, on the ask side, but that being about 2/3 of that total volume traded on the 30th. But that is, 2,000 going long when open interest was previously about 500 contracts. And so this premium being, again, less than 1 million, but still hundreds of thousands. So, I'm pretty intrigued by this one. But I do think this is the thing that really also stood out to me that made me feel a lot more confident in it. Comparing this with Affirm. So here, since I have Affirm pulled up now, look at these numbers here. This is, 30 million, and that is in the premium. And so I believe that, there are no dollar signs there. So I believe that's contracts, but that could be dollars because it does say premium there. But either way, that number is suggesting going long, or that these numbers are suggesting, whether there's more premium being traded on the bullish, the long side, or the bearish, the short side. And so now if I do enter in Nvidia up here, we can see, so there's a little bit of a lag. We can see that information. And so looking at that, we can see that it's not 10 million. It's not 30 million. It's almost 700 million premium going long. Premium for the bearish side, this is, more going on the bearish side. So that is a little concerning, I guess. But if we do look at the numbers over here, we can see that as far as the volume goes, again, this might be my misunderstanding of what these numbers are. I'm still learning. But looking at the volume over here, we can see that calls 3 million contracts versus puts 2 million. So looking, pretty heavy in both of those, but more so on the call side. And then looking at that premium, that is, 1.29 billion versus, about $500 million on the put side. So this is just, an order of magnitude greater than, what we're looking at with Affirm, what we're looking at with Palantir. And so I find this to be a really compelling contract. And so what I plan on doing, let's see, I'm just pulling this up in my little spreadsheet over here behind the camera. So what I plan on doing come market open on Tuesday, I have an order placed to pick up an Nvidia contract, so to pick up this contract here. And so I should note, though, that it does look like, while before I get into that specifically, let's look at this contract over here. The average fill was 144, so I want to beat that. I want to get a better fill than 144, or at least match it. And then, so with that being said, I come over here and it looks like right around close, it was around 135. But if I do pull this up in Webull, I can look up the options here, looking at calls September 28th, and that was a strike of 136. So I'm just going to pull that over here. And so it does look like the buy for that is 144, so I could potentially get that filled at market open at the same price that that unusual whale got filled at. But if I do scroll over here, I can also see that the theta decay, so looking up here it says theta there, the theta decay for this contract is right around 6 to 7 cents. And so I could see this dropping from, around 144 to maybe 140 or 138. And so I have an order placed to pick up a contract at 136, $1.36. And so we'll see if that gets filled. Maybe it doesn't get filled. I'm fine with it not getting filled. There are plenty of other trades. But we'll have to see. Maybe that gets filled, maybe it doesn't. Maybe I'm being greedy, wanting to get a little bit of a discount. But with that being said, I would not hold this indefinitely. I would not hold this until September 27th. I would hold this for a swing of 20%. And, I'm sure it'll go up higher than that. But my thesis, like I said at the beginning of this video, is not to be diming and handing these contracts and to, 10x or 2x, whatever it may be. I just want a 20% swing and I want to get in and out. So if I pick up one of these contracts at 136, let's pull up that calculator app. And so I'm just going to clear this. And let's say I put $136 on it. And so really, that is like divided by 100 shares per contract. That contract price is 136. And so 136, but I'm risking 100 times that. So I'm risking $136. What is a 20% gain? So I'm just going to multiply that by 1.2 to get that 20% gain. And so then my limit price, once I get one of these contracts, I want to then sell at 163. And if we do, flip back over to this contract over here, we can see what the highs and lows have been the past few days. It's certainly been very volatile, and so I think that this is very reasonable that it could drop to 136, so I'd only be risking $136 rather than $144, and then to get to a 20% swing, which is my goal, 163 or 163. That definitely seems feasible with, how it's traded. So that is what I plan to do to start the trading on Tuesday. Maybe it ends up being a good idea. Maybe it doesn't. And then so I just wanted to go over a few other contracts that are here, just going over some things that I've done. So I did get some alerts with GameStop for this contract. And, I bought a couple contracts and I sold a couple contracts. And so what I ended up doing, I think over the course of the past couple days, so Thursday, getting this alert here at this big buy order. So I got that alert, and what I did, the average fill for that day was 140. I got one contract at 140, and let's see what 140 times 20% is. So $1.40 times 1.2 is 168. And so I actually swung that contract at a limit price of $1.68. I could have made a lot more, because it did go up to, looks like the high from yesterday was $2.52. You can see right there, traded on the 30th. So I could have made more, but I did swing for that 20%. That was my goal. And, I swung that on Thursday. So I bought and sold on Thursday. It was a nice day trade. But then I bought back on Friday. I just placed a limit order to buy back at let's see. Oh no, actually at close on Thursday, I thought this was going to go higher. I placed a limit order to buy at 135, but then I recognized it's probably not going to get filled, and so I ended up getting filled at 138. And so let's look at what the swing for 138. Just going to type this in so I'm not clicking the mouse so much. So 138 times 1.2. That would have been a swing to, 166. But what I did, try not to be too greedy, is, let's see here. So I bought that contract at 138. I actually swung it for a 30% swing. I sold at 179. So, I definitely could have made a lot of money with that. I could have made more money with that. But the goal is to be in and out. And, 20% swing in one day followed by a 30% swing in another day, risking, over $100. That could potentially go to zero. So I'm pretty happy about that. Maybe this goes up to, $3 per contract, $4 per contract. I could have made a lot more money, but that's always going to be the case. And so I just want to be getting in the practice of swinging for 20%, because there are going to be other contracts that maybe only go up 10%, and maybe I got to cut losses, or other contracts that go up exactly 20%, and then, I sell at the top. And, that's kind of my thesis with swinging these contracts. As I get more comfortable with them, as I'm able to afford more than just one contract at a time, then, I could hold some, for some fun after I take profits along the way, trimming in 10% increments as it goes up. And then, have one contract at the end to YOLO for a, that 2x, 10x, whatever it may be. But yeah, so that is kind of my thesis with GameStop. And so moving forward, I wish I was still holding, but I'm happy I made that money. And so my thesis with this contract moving forward, it is expiring in 18 days, so that's less than 3 weeks. But my thesis is that if it pulls back to 150, so that's higher than, what I was buying before, that might be a good dip buying opportunity. And so, just kind of, seeing this trend up like this, it didn't just go straight up. It went up and then pulled back, went up and, kind of consolidated. I think it's going to keep going higher, but maybe there's a little bit of a gap down on Tuesday, or, gap up and then a pullback is really what I meant to say, gap up and pullback. On that pullback, maybe it pulls back to 150, and then I'd be interested to get another contract. And, but that would be dependent upon what is happening with unusual whales. If people are offloading, if, we got a big red candle on Tuesday here, then, maybe I would not partake in that. And I don't have an order placed, but it is something that I'm interested in keeping an eye on. And then other contracts here, one is one of these puts. I talked about this in other streams, but since I've been going on for almost 50 minutes, I'm probably not going to talk about this one too much. Effectively, there was an alert here at 49 average fill. I bought one of these contracts at 48, and I've kind of regretted it ever since. And so I've kind of been, debating with myself, do I, want to average down, or do I not want to? And what I think I was, I think about this stuff and I don't always act on it. And so what I was thinking about doing with that one, if I just flip over to the Norwegian Cruise Line Holdings chart, this is, I should note a put, $16 put expiring in October. So there's 46 days, so I got time, so I don't need to panic and cut losses or anything. It did look like, it was going up, hit a high, let's see, on Friday of 43. So getting close to, what I had bought at. But this is one, I've been holding it too long. I just want to get out. It was not the right trade for me. I learned some lessons from this one. But I don't want to learn the hard lesson of losing $48. I want to get out of this position. And, so just looking at the chart, it does look like it has pulled up to, this downtrend, this resistance. And so I could see it pulling back. And so maybe I'm going to have an exit on Tuesday, and that would be great. I was thinking that I might buy another contract at 32 cents. And so just looking at this here, the low on Friday was 35 cents. The low on Thursday was 36 cents. Low on Wednesday, 38 cents. But on the 27th, that would be Tuesday, was 32 cents. So maybe I could get another contract at 32 cents, get my average down. That would put my average, let's see, from 48 cents plus 32 cents equals 80 cents, but then divide that by 2. That would then put my average at 40 cents. Probably could have done that in my head, but doing mental math on camera is tricky. So yeah, I mean that's potentially intriguing. I do have an order placed, I believe, to pick up one at that. But at the same time, I don't want to then be risking $80, turning a risk of $48 into 80. I've gotten into trouble in the past by just throwing money at contracts after I'm on the wrong side of the trade, and I might just have to cut losses. But since we're trading so close to 48, I think that I might I might leave the order at 32, and I feel like this one could play out all right. And just thinking about that, I do want to note what my sell would be at for this one. I'm just pulling it up on my phone because that's how I trade. My let's see here. My sell would be at 53 cents. Not too exciting. And so the rationale for that, I believe. Let's see if I go to 48 cents and then multiply that by 1.2, that's not correct. And so if I go from 48 cents and multiply that by 10% gain, that would be 53. And so that is kind of my thesis, that I might be wrong about it, but at least maybe I could take a 10% swing. And so that is, a good trade. And maybe I exit too soon, and maybe this would go up to $1 and I could 2x. But I don't feel like I made the best trade here, and so I kind of want to correct that and get out of it. And then similar to that, Warner Brothers Discovery here, we can see this is a call with a $9 strike, also expiring in 46 days on October 18th. And this is one, I believe, right around the same time. This was the average fill was 32 cents. And let's see, the average fill that I've got to look this up in a little spreadsheet I keep on a screen. And, that is just behind the camera as far as you guys are concerned. My average fill, one contract, was 29 cents. I'm only risking 29 bucks with this one, so not really too bad. If we do flip over to the chart, we can see here that, call, maybe this is, it's moved up to here. Did get rejected from the 786 here, pulling back to around the 50%, but what's probably better for me to do is do another retracement here. It might get a little bit cluttered, but just do that and see, where is it at? I'm just going to color this yellow so it stands out a little bit, and I'm going to add those other levels to it so we can see. So I've got going down to the, let's see, the 50% right around there, matching up with the 32, the 382 right there. If I look at the 382, it does look like we're finding some support there potentially. And so I do think that, similar to the Nvidia chart, that there is a pullback and that buy the dippers, could be pushing this higher. And so I think that this could be going up. If it does pull back more, I believe I have an order to buy a couple more contracts. Let's see, I've got this on my phone here. I think I would buy a couple more contracts at 10 cents. And so let's just look at the table over here, the data over here. We can see that the low from Friday was 14 cents, the low from Thursday 15 cents. So, I don't necessarily think 10 cents is going to get filled, but if it did, I'd buy two contracts that put me at 3. And let's see if I pull up that calculator with the initial contract that I have being 29 cents plus 2 at 10. That's 49 cents. Divide that by 3 contracts. Divide that by 3 contracts. That would put my average cost at 16 cents, or risking $16 per contract times 3, 49 bucks it looked like. And with that being said, if I got my average down, I could either exit just at a lower price, but still making a little bit of money, or I could swing and hold that as the range. I think that this does look like it could be turning around and going higher. And so, we'll have to see about that. Of these contracts, the ones that stand out to me as being foolish on my part, I shouldn't have done them. That's why I want to, really just pick one contract per day that stands out. Warner Brothers Discovery and Norwegian Cruise Line. Those two seem risky. I was dumb about them, but I think I'll be able to make some money with them. If not, Worst case scenario, even if I add to my positions, I'd be risking losing $80, but I think I'll be safe with them. GameStop, I could have made more money, but the point is I made money in and out. 2 trades making 20% and 30% over the course of 2 days, so I think that's really good. Affirm, I'm intrigued by it. The chart I think looks pretty interesting, as I did show over here, getting in that close higher than that prior close, so could be going higher, but the volume diminishing, and this being, the RSI being overbought, and it's starting to flatten out a little bit. I think it could be rolling over some. And then the other contract, was Palantir. This one also seems iffy to me, just not enough money behind it. Maybe there is a minke whale behind it, but there isn't a unusual blue whale, and that is what I'm looking for. And to me, the flock or the herd, whatever it would be for whales, the school, I don't really know, of blue unusual whales. Right here with Nvidia, this contract in my price range with the average fill on Friday being 143, that is something that I can afford. I can risk that, and I can swing this for a potential 20%, if not more swing, which I'm hoping I get to do on Tuesday, but we'll have to wait and see. But with that being said, I did just want to pull up this here from the community page on the channel. The reason why I made this video rather than doing a live stream is because it was voted by members. Unfortunately, only one member voted, but it was voted for me to do a hunting unusual whales video, and so that is this. If you are interested in becoming a member, I do post, unusual whales alerts that stand out to me. I also post some trades that I made, like that GameStop swing. I could have made more money, but the point is I made money. I don't have any more risk on the table. And I have traded some other contracts. This Intel one, I had a limit, that was a little bit lower than that, but it gapped up. I could have also made more money with this one. I could have more than 2x'd my contract, but the point is, like I said, I made money on that, and that's more than a 20% swing. So, I am happy about that one. And then also just, to share, I will likely be putting out a video, maybe tomorrow, maybe on Tuesday, looking at the S&P monthly returns, because this does suggest that September could be a pullback, and but then looking at these other months for the year of 2024, they don't match these trends, and so I kind of want to look at this data but also consider the error bars. And so, hopefully I'll have a chart that looks similar to this, but I might just have a table looking at the numbers and stuff. But yeah, I would definitely encourage becoming a member. It is, a great resource. I post a lot of stuff, to that, and including hunting unusual whales, and trades that I've made. And I try to get people's feedback as well. So I think that it's a great thing to do. This is another one that this is to buy. Effectively Plug shares at 186, which was the prior low, and I might actually put out a video on Plug tomorrow because maybe they're putting in a double bottom. But yeah, I am rambling on a little too much, but those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and I hope you guys have a great Labor Day on Monday. Take care, y'all.